Hi everyone, let's work through this basic cash budget demo. We're dealing with the Grenoble Enterprises business, and they had sales of $50,000 in March, $60,000 in April. They had forecast sales of $70,000, $80,000, and $100,000 for the months of May, June, and July, respectively. Okay, the problem also says the firm has a cash balance of $5,000 at the beginning of May and wishes to maintain a minimum cash balance of $5,000. So what we're asked to do is prepare and interpret a cash budget for the months of May, June, and July. Okay, let's look at point 1. The firm makes 20% of its sales for cash. So let's work on that part first. So cash sales are 20%, right? So what that means is in any one month we can take that cell there, the cell above, times 20% to come up with cash sales. And I'll just copy those over. Okay, next we need to know that 60% are collected in the subsequent month and the remaining 20% are collected in the second month following the sale. So if we talk about the next one as a subsequent month, we know that that amount is 60%, right? And then we could abbreviate this as subsequent month 2 is 20%. And if we calculate that, we are going to take the amount of sales from above. Well, we're only interested in May, so why don't we start there and say that amount is going to be equal to lagged 1 month times 60%. You see how I'm dragging that? So I come up with 36,000. If I copy that, those formulas will all be correct, right? Pulling from the right cell. And then the subsequent month of 2 months before is 20%, so I'm going to take 2 months before, which would be March number, that 50,000, times 20%. Okay, see how I'm pulling from 2 months before? Copy that over, and I now know my cash sales from sales. But there is also some other income of $2,000 per month. Okay, that's easy enough to do. Let's put in $2,000, and that's $2,000 every month. So with that, we can calculate our total cash receipts, right? Let me indent that just a little bit, and we will just sum from the 20% through the receipts plus the other income for a total of 62,000. Now I'm going to copy that over and underline that so that that's very clear to see. That takes care of cash receipts. And that also takes care of number 1 and 2 in our data. Okay, then we look at number 3 and we say, that takes care of the cash receipt side. Let's look at the disbursement side. The firm's actual or expected purchases, all made for cash, are 50, 70, and 80 for the months of May through June. Okay, let's just jot those down. 50, 70,000. And 80,000. And these are purchases, right? And what are we dealing with now? We're dealing with our cash disbursements. So perhaps we could insert a row and label this as disbursements. Isn't necessary that you do that, but it might make this a little bit easier to read. Okay. After we've taken care of the purchases, we need to look at rent, which is $3,000 a month. Again, pretty easy to do. Copy that in. Wages and salaries are 10% of the previous month's sales. Okay, so it's 10%. Why don't I call it lag 1, right? For a previous month, lagging 1 month sales. So we would take sales from the previous month is that cell, that's 60,000 right there, times 10%. And then we can copy that across, and you'll see that I'm constantly pulling from 1 month before. Hopefully you see that. Then we need to consider dividends. Okay. Dividends, $3,000 will be paid in June. So here we have a unique 1 month situation to drop in. We also have some principal and interest to consider. $4,000 in June, so let's drop that in. What's next? A cash purchase of equipment of $6,000 is scheduled in July. Okay, so why don't we call that, new equipment purchase? That's in July for $6,000. And what do we have? We have taxes due. And we need to make that payment in June of $6,000. So some of these are pretty straightforward. Once we have that, we can calculate our total disbursements. Now, to give us room, I'm going to slide a little bit. Now, and I have the screen frozen so the months won't go away, okay? So you lost a couple of the rows, but not all of them. And we'll call this the total cash disbursements. So that's what it is. If I can type it right, I'm going to indent that. And then I will simply use the sum command of anything above. Copy that across. We can underline. The best way to probably underline. Let me put a 0 in this cell and a 0 in here. So when I do the underline, we actually can see the lines a little bit. So now we have the total cash receipts and the total cash disbursements. So what do we solve now? We can determine the net cash flow next. And how I'm going to do that, I'm going to indent that back out now, is I'm going to take, now actually let me insert a row here to clean this up a little bit. And I'll slide down a little more so you can see it. And that's going to be equal the total cash receipts less the cash disbursements. Once I have that, I can copy it for each month. Again, I'll slide down a little bit more. Okay. And now to determine how much cash we need, we also need to add in the beginning cash. Okay, so if we add the beginning cash, I'm going to call it balance. The beginning cash balance they gave in the problem was $3,000. Let me confirm that that's what it was. $5,000. Okay, so if we add that to the net cash flow, we can calculate the ending cash balance. You know what? I'm going to take the word add out of there. I think it's clear that you would add that in. So to come up with the ending balance, we would take the net cash flow plus the beginning, right? Come up with the ending cash balance. Now, there is a minimum cash we're supposed to keep on hand. That minimum cash is $5,000 at all periods, right? So the last thing we would calculate would be either an excess cash or a required cash financing. Okay, I'm going to call this excess or required. Let's just talk about required cash financing. Okay. Now, what we know is if we have 8,000 and a minimum of 5, there's no requirement there. Okay? So now, if once we have 8,000 is the ending, that becomes the next period's beginning. So I can just copy that in there. Then I can copy this formula in here. Okay? And again, I can copy across. Copy again. And what we have is required cash financing. I'm going to write in the word none since the ending is greater than the beginning. In this one, I'm 13,000 shy, so I have to take the minimum cash plus what we need. I'm adding a negative, if you will. So I have an $18,000 required cash financing, and I would have a $31,000 that I would need here. Okay. Now, if we wanted to calculate that excess cash balance, we would drop it in here and say that minus that when it applies. And since it doesn't apply here and here, that really completes our problem. Now I'll slide that down. Okay, that takes care of all the numerical work we need to do on problem 3.7. Now let's do a quick interpretation of what this means. If we were facing this, we would have a decision that says we need cash of $18,000 in June and $31,000 in July. So if we want to go to our creditors and go to them just once, we would want to establish some kind of note, typically a line of credit, so that we could borrow when we need it and only when we need it. And the decision would be to establish a line of credit in the amount of at least the $31,000. And that's a quick interpretation of our problem. Okay, I'll slide back up so you can see all of it, then slide down.